It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, October 26, 2016. Cruising our way through what's been a pretty darn good week here, last full week of the month of October. Hope you guys are doing well out there. Crude is bearish and trading all the way at the lows of the daily range after completely collapsing off the big round number of 50 earlier today. E-mini S&P is also bearish after its own collapse off the high. Gold is bearish as well with a big overshoot at the channel low, and the euro is bearish and trying to break through some key support levels on the way back to retest today's lows as well. But we had a wild ride on most of these markets today, and those big ranges combined with some big news tomorrow mean we have some big opportunities coming for Thursday's trading session. The only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. Not to worry, if you're watching the video right now on our YouTube channel, there's a link in the description of the video. Follow that link in the description of the YouTube video and come over here and join me for the full-length version here on the blog at Sideways Markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening before 8 p.m. when our nightly newsletter goes live. Download those charts. You can download all the charts you see me using in tonight's video by following that link right below the video. In the upper right-hand corner, don't forget to grab your free pass. If you're not a member here at School of Trade, I'd love to show you around the trade room. Grab the free pass in the upper right-hand corner. And if you're brand new here to School of Trade, we got a great frequently asked questions page on the right-hand side of the blog at Sideways Markets. Follow that link and learn the who, what, where, when, and why we're considered to be the very best in trading education. All right, guys? Again, hope you're having a great week here so far. Last full week. Don't forget Halloween. Halloween's coming right around the corner. Next Monday is going to be wear your costume to the trade room day for all you members out there. I like to have some fun with you guys. Let's jump right in. Tomorrow's Thursday, October the 27th. October the 27th. No major news to worry about tonight, right? Nothing earth-shattering coming out from the overnight Asian session, so nothing to worry about there. Tomorrow here, we get the GDP from our good friends in Great Britain. We get the durable goods here in the U.S., jobless claims in the U.S., and pending home sales. Those are going to be the big news events tomorrow morning. Of course, GDP at 4:30 a.m., durable goods and jobless claims at 8:30, although nobody really cares about jobless claims. That number's been manipulated for years now, and you can always tell, liquid markets are really smart. The market never gets it wrong. They can publish that jobless claims report all they want, but traders clearly don't trust it because the market doesn't even move on it. The durable goods orders, though, is a big deal tomorrow, so it'll look like the jobless claims report's important, but what they're really going to be reacting to tomorrow is that durable goods order. And, of course, the pending home sales at 10 a.m. tomorrow morning. That'll wrap up the morning session. We got some light news tomorrow night. We'll talk about that in tomorrow night's newsletter, right, coming from Japan. And then don't forget, we do have daylight savings time coming to an end. I know. Glass is half full, glass is half empty. Depends on whether you're potato, right? Depending on what you like about that, right? We got summertime coming to an end. I know, right? It's always a sad story. But that means we got some great trading coming right around the corner. Remember, the best time of the year is when the nights start getting a little bit colder. That's when people are at their desks getting to work, and we start getting some of the best opportunities of the year here, the last part of the year and the beginning part of next year, right? So stay tuned on that. And come out and join us tomorrow. Don't forget, we're going to do all this together tomorrow in real time in our trade room at 8 o'clock Eastern Time. Now you know the news schedule for tomorrow. Now let's check out some charts and put together our strategy for a Thursday session. First of all, we'll go crude, S&P, gold, and we'll wrap up with the euro tonight. Crude is bearish and trading at the lows of the daily range after collapsing off the $50 a barrel level just after today's inventory report was released. The bears have clear control, but it's obvious the sellers don't want to sell this low, or else they would have sold that last test at the moving average. So we assume they want a higher price, most likely up at the reversal lines and battle zone areas overhead, which leaves the door wide open for the buyers to take control if they can find some strength as price pushes back above the moving average. Sellers would love to see a test of the battle zone for a big move back down, and the buyers would love to see a successful breakout pullback above that reversal line at 49.32 to get the move, right, to get this moving back towards that battle zone. So, ultimately right now you can kind of see, and this is going to be something not only on crude oil, but you'll see on the S&P as well. You want to keep an eye on this as possibly being a large trading range tomorrow. So for all intents and purposes, we may end up all the way back up to that 50 here. The bears have control, so we have to see proof of the bulls taking control if we're going to be able to trade that move. But this may end up being just one big range. Now, kind of piggybacking on that idea, what don't we want to do if this is the low of the range? What do we want to avoid doing at the low? Selling the low, right? So really, when you look at this in terms of a trading range, the bears are not going to be too excited. You can kind of tell with all that strength on the way down, why did we not see at least a double bottom here out of those bears? That's a pretty darn big clue. It leads me to believe that this is going to be treated as a range. If it's a range, clearly there's a bear bias to it because of this sharp move down. If it's a range, the bears, we got a little bit of a trend line coming up here, right? You'll notice here, connect these lows, right? There's a support trend line. And so you start to see some reasons why the bears may not be interested in taking this price lower, right? I don't want to sell into that rising support. I don't want to sell into the low of that range. I don't care how bearish it is. We don't have enough proof. It's not reliable enough. So this is where things get interesting. As a buyer, I can now anticipate a little scalp opportunity going higher. As a seller, I can anticipate those buyers thinking about that, and I can look to, whoop, right, sell it right back down again. So this is where it starts to get a little bit interesting. If I'm a seller, here's what I'm looking for. I'm looking for a move back up, obviously, right? Really, if you're a seller, you want to be looking at the areas right here or down here. Either we need to go up and then back down, or we need to go through the low, right, hold and keep going lower, right? Because sellers are not, at least not intelligent sellers, experienced sellers, are not going to want to mess with the low of this range, especially that prior month high that they barely missed. This is the third time now this week they barely missed it. So if I'm a seller right now, I'm thinking, give me a move back above 32. Whether I can get the buyer failure here and back down, or buyer failure here and back down, those are going to be prime, right, prime opportunities for those sellers. If I'm a buyer right now, I'm basically thinking the same thing. I hope it goes higher here if I'm a buyer, but if I'm a bull now, here's what I'm looking for. Quick move up, moving average above that 32, breakout pullback. Don't mess with the battle zone, get through the battle zone, and then look for the hold above at that point, right? So either get to it quick or wait to get through that battle zone, give it 49.64, 49.65, and those will be the opportunities here for the buyers. Sellers, again, as the price goes higher, sellers want to see buyer failure for the move back down. You know, and a way of looking at it here would be if it goes up a little bit higher, right? Buyer failure, breakout pullback, and then back down we go, right? Buyer failure, breakout pullback, and then back down we go, right? So sellers would love to get this price up just so they're not selling at the low. Buyers are thinking the exact same thing, right? Let's get above that 49, that 49.32, get that moving average up above it. Let's hold that old pullback, right? Get through it, get through that battle zone, and then we can work on getting up to retesting, right, retesting that high, right? So those are going to be some easy opportunities there for those buyers. They got to hold the first one, though. If they can't hold the first one, they got no choice, right, but to still wait until they get the second one. Now, as this price goes lower, right, as this price goes lower, in all reality, the buyers have an easier job at these lows. If I'm a seller, what you got to be thinking about at these lows is I've got to get a very strong move through, and I've got to see this thing hold below that 48.79. These purple lines on my chart, right? They get me very anxious, right? I can't rely on areas like this. Prior month high, as you can imagine, buyers are going to be trying to defend, sellers are going to be trying to short the highs. It can be a really, really choppy area. If there's one place on this chart I would rather not be trading, it's at 48.79. So get it through that 79, hold that pullback, and look for that continued strength. Also, this may end up being a larger, right, measured move down here. Obviously, we've got to get through that 79 first. Like I said, I think the buyers have a little bit easier job as this price goes down. Think about something like this as this price goes lower here, right? Digs in, can't quite get below the prior month high, and then bam, breakout pullback. That's going to be a pretty easy pill to swallow for the buyers. Very difficult for the sellers down there. Okay, that's why I said earlier, the sellers are hoping. Everyone's really hoping the price goes up right now. Right? So if it does go down to that low, be careful selling that low. If you're a buyer, remember, you can't just blindly buy the low because it's bearish at that point. Wait for that strong push up, right? Get that moving average to follow, get above that support trend line, and you're good to go on the way back higher for a nice, reliable opportunity. This should be interesting to see what happens. If it sits here and goes sideways, right? If it sits here and goes sideways, it really doesn't give us very much to work with. I can't sell as it goes lower. I can only sell reliably as it goes higher. As it goes lower, buyers can't buy that yet. They got to wait for it to turn and then buy that pullback on the way back up. Patience if it goes sideways. If it goes up, you know what the plan is. If it goes down, you know what the plan is. Now all we need is to get some more candlesticks. Let's keep going. Next up here, we'll go to the S&P. The E-mini is bearish after the collapse off the highs, but the bulls are putting up a pretty good fight for control. Whoever wins this battle will determine whether we head back to the highs or the lows in tomorrow's session. The sellers took control on the way down off the highs, which means the buyers need to show us they can indeed hold this pullback, or the sellers will use the failure to send it back to retest the lows. Buyers need to see a successful breakout pullback above that reversal line at 35 3/4 for a target at the high and the measured move. The sellers, on the other hand, will look to sell into that failure as long as they don't need to sell into rising support, right? That trend line is staring them right in the face for those sellers. And if they can either get it up to sell down or get through that rising support, their target, of course, is the low of the range, right? And that larger measured move coming off the high. As you can see, I'm pretty much doing the same thing we saw on crude, right? Look at this thing now, and you could really look at this as one big trading range. Through the low, to the high, to the low. And this is why I say, boy, this really has potential now to punch through that high. This one's a little bit of a kind of an oddball, right? As you can see here, like I said last night on our newsletter, don't be surprised if the E-mini, right, the S&P, follows crude oil around the news today. What do you think happened here? Look at the time it was, right? 10:30, price spikes up, collapses right back down. It's blatant, right? It's shameless is what it is, right? It's kind of pathetic, right? It's like, don't you guys have anything else to follow along with right now? But you can definitely tell, right, that all eyes and ears are focused on the price of oil. It is that important right now to our economy. And so this, of course, showing a very good example of that. Now, big moves on crude, big moves on the S&P, difficult to find causation and correlation. It's very difficult to play these moves, but this is obviously, right, the end result that we saw from today's big news event. So, big move up, right? Big move up, buyers have control. Big move back down, sellers take control. They have the recency. Now we go back above the moving average, and this is where we have a good example. Lots of strength on the way down, lots of separation below that moving average, right? And then we poke our heads right above the moving average now. The bulls don't have enough proof yet, right? The sellers have the control, but the bulls, boy, they are putting up a really good fight for it here right now. So what do we want here to be a bull? If we're going to be a bull, we have to take control here. Control would be get me a new higher high. Right? Basically, control will be taken if they hold this pullback. And holding this pullback, my definition of that is get me closing above that high. Right? It's a bear market. So as we can see right now, if you want to be a buyer on this market, break out, pull back, and go. Right? Break out, pull back, and go. We get a measured move. Right? That measured move now is waiting to be a target overhead. The prior week high is a target overhead. Really, the targets now for the bulls are going to be up at that 39 3/4, the measured move, and the prior week high. I've also got this channel that I've anticipating here, right, if this price does make a run for it. Really, the most important thing is, though, is that remember that the ultimate short-term objective right now is to get back to the high of that range. Okay, so think of it this way. Breakout, pull back, breakout, pull back, and then up we go, right? Breakout, pull back, breakout, pull back. Notice where the moving average is. Above the 35 3/4, above the 39 3/4, right? Really important we get that. Again, when I say the word successful breakout pullback, my definition of successful is strong enough to get that moving average up above that area.